Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. Today we're going to talk about USO. Everybody's been asking me about USO, what's going on with USO. It's probably the biggest news over this weekend. So I'm going to talk about what USO is doing, what's going on with it, what's the big news, and I'm going to talk about what I'm going to do with my tiny position in USO in my public portfolio. It's probably been 2 weeks, maybe 3 weeks at the most, that I was holding on to this position. It's a very tiny position. It's a commodity play, and I'm not very comfortable with commodities. So I just got, I think I spent maybe $100 at the most in my public portfolio. I have it also in one of my private portfolios, but again, just a tiny little fraction of that portfolio. So we're going to talk about exactly what's going on. But by the way, if you guys like what I'm doing, please give me a thumbs up. It really helps out the channel. Consider subscribing if you haven't yet already. Check out my other videos. I do a lot of videos about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. With that said, let's get started. All right, so here's the news. Look at this guy. He's like just completely shocked, and so am I when I heard this news a couple of days ago. So USO, which is an oil exchange traded fund that's wildly popular with traders, has been cut from buying oil futures contracts after a surge in volatility saw oil prices turn negative last month. RBC Capital Markets, which is basically USO's broker, they have said they're no longer allowing USO to hold positions in or buy any oil futures contracts until further notice. As a result of RBC's actions, USO says it may hold larger amounts of treasuries and cash, which will further impair USO's ability to meet its investment objectives. So what does that mean? I'm going to break it down so it's kind of easy to understand. Basically, USO's mama said, no more, you can't do it, you can't trade it, you can't buy anymore, you're in trouble, you're a naughty, naughty boy. Basically, that is what's going on. It's like as if your broker, maybe if you're using Robinhood or Trading 212 or whatever brokerage you're using, like I'm using Fidelity for most of my trades. It's like if Fidelity came to me and said, no, you can't buy this, you can't buy this. You could buy these things, you could hold cash, you could hold US Treasuries, but that Tesla stock you're gonna buy, no, we're not gonna allow you to buy that. We're not gonna allow you to buy USO. We're not gonna allow you to buy this or this or this. And basically that's what they're doing. They're saying to USO, you cannot buy any more oil futures contracts. And that's what USO does. That's like their bread and butter. That's exactly what they're doing. They're supposed to be doing is buying oil futures contracts, and now they are no longer able to buy oil futures contracts. So obviously that's a fundamental change, a change to their underlying goals, right? Imagine if your goal is to buy dividend stocks because you want dividend income, and your broker said, you're not allowed to buy dividend stocks anymore. You could buy growth stocks only. Well, that would just change your entire portfolio, your entire underlying thesis, right? Your whole goal is to do this one specific thing. So just to recap exactly what USO used to do. So USO used to buy only the future months contract. So for instance, now it's May, they will only be buying June contracts. So in May, they would buy June contracts. And then when June rolls around, or by the end of May, they would turn around and sell those contracts, because the contracts typically in a normal environment, the contracts would go up. So if you bought it in early May or even before May, buy these contracts, and then by the end of May comes around, or by June comes around, the prices of these contracts will go up because the oil prices go up. And so then they would sell those oil contracts in June, and then they would buy July contracts, and then rinse and repeat. And that's what they were doing, and it would only be 1 month out. They would just hope the next month the oil would keep on going up. And in a normal environment, that's what happens. The oil prices tend to go back up. But last month, the oil prices did not go back up. Basically, the whole oil market crashed, and they were holding contracts that they were trying to sell, but they couldn't sell it because the prices actually went lower than what they paid for them. So imagine, that's not a very good philosophy. That's not a really good plan. If you're buying contracts at one price, and by the time you're ready to sell them, the contract price goes down, obviously you're losing money. And that's exactly what happened. Oil prices went into the negatives, and so they lost a ton of money. And so basically their broker, the people that fund USO to do this, they are cutting them off, saying they are not going to allow to do this, probably because it's too risky. But it doesn't make sense to me. USO has changed what their objectives were. They used to only buy contracts 1 month in the future, but now they're buying contracts, basically buying the whole curve, buying into the next few months and into, I think, 6 months and up to a year into the future oil contracts. And it's been working. You know, look at these oil prices. They are going up. Like July contracts are $33. Next month is $34. Next month, September is $34.59. Going all the way to December is $35. Going all the way to April of next year is $36.99. So they are going up. So as long as oil prices keep on going up, USO would be fine because they're holding contracts well into the future. So for instance, you know, July, next month contracts is $33.72 currently. They bought July contracts, I think they bought them in the beginning of May or in late April. So they probably paid like under $20 for these contracts, and now they're able to sell them for $30+. So what they were doing is working. So, you know, it is what it is. USO's mama said no more. And so what do I have to do? Well, obviously I have to get out of this position. It's kind of a no-brainer. If the underlying fundamentals of what they're doing, they're no longer allowed to do, I just need to get out of the position. So here's my position. Look at USO. Basically, I'm up 42%, which is, you know, amazing for just a couple of weeks. And so, like I said, it's a very small position. 150 bucks I had in it. Now it's up to 213 bucks. So obviously no brainer. I need to get out of the position because I don't know what's going to happen. I don't know if USO is going to be able to get another bank to allow them to continue to buy futures contracts. I don't know if they're going to just basically do what they're doing with the contracts they keep on holding and then just kind of sell out of them and just basically fade away and no longer be in this market. So there's too much uncertainty for me, obviously, because I already made 42% in a couple of weeks, and so it's just a no-brainer. I mean, maybe if it was up 5%, 10%, I might stick around to see what happens, but with a 42% gain, it's time for me to take my money and run. So that's what I'm doing, guys. Let me know if that's what you're doing, guys. Let me know what you think of USO. Do you think there's a future here? Leave a comment in the description below. Thank you, guys. Thank you to all my subscribers. I have over 200 subscribers now. Thank each and every one of you. Give me a thumbs up if you really like what I'm doing. If you found any value in my videos, give me a thumbs up. Consider subscribing if you haven't yet already. Check out my other videos. Do a lot of videos about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. All right, guys, catch you in the next one. Peace.